Welcome back to Investing Talk Podcast.
Today we're looking at MP Materials.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. And this company, well, it's navigating a really complex and fascinating situation right now.
It really is. I think what catches your eye first is this paradox. You have revenue that's dropping sharply, but at the same time, its strategic importance just seems to be exploding.
That paradox is the whole story. And to get it, you have to understand what they actually produce. We're talking about rare earths.
Right. Specifically neodymium and praseodymium, or NdPr.
Exactly. And these aren't just, random metals. They are absolutely fundamental for the high-performance magnets and pretty much all modern tech.
Everything from EV motors and wind turbines to defense systems and even AI hardware.
For decades, China has had a near-total monopoly on this whole process, the mining, the refining, and making the finished magnets. So building a supply chain for NdPr outside of China, well, it's become a huge geopolitical priority.
It's not just an economic thing anymore. It's about national security. And that's the lens you have to see this whole story through.
Absolutely. And it explains the short-term pain.
Okay, so let's talk about that pain, the numbers. Q3 2025 revenue came in at what, $31.6 million.
That's it, which is a 50% decline year over year.
50%. I mean, if you just saw that headline, you'd assume the business was in serious trouble.
You would. But then you look at the other side of the coin, the actual production of the NdPr oxide that surged 119% in the second quarter.
So wait, production is way up, but revenue is cut in half. How does that work?
It's a deliberate pivot. This is the key. They've basically stopped their traditional export sales.
The ones that were going mostly to China for refining.
Exactly. They've stopped those sales and are now feeding all of that raw material into their own new processing facilities. They're taking a planned revenue hit now.
So they're sacrificing the immediate sales
to build a vertically integrated system. The whole idea is to stop being just a raw material supplier and start being a high-value product manufacturer. They want to sell the finished magnets themselves, not just the ingredients.
And that's where the new Fort Worth Magnetics facility comes in. It needs that feedstock.
That's the one. It's a classic case of short-term pain for what they hope is massive long-term gain.
Right. So that explains the strategy. But how does that create a real competitive advantage, a moat?
Well, it's a huge one, because by doing this, MP is setting itself up to be the only fully integrated NdPr magnet producer outside of China's direct control.
And that position is what's attracting these huge blue-chip partners.
Yes, the kind of partners who absolutely need a secure, Western-aligned supply chain. We're talking about a $500 million commitment from Apple.
For magnet procurement and recycling, right? And offtake deals with companies like General Motors.
These aren't just customers, they're validators. They're betting on this entire strategy.
And it's not just corporate partners. The U.S. government is deeply involved here.
Deeply. The Department of Defense has put in, $400 million in preferred stock? That makes the DoD a major shareholder.
That is a massive vote of confidence. But does that heavy government involvement create its own risk? What if policies change or defense budgets get cut?
That's a fair question, definitely a risk to track. But right now, the market sees it as a huge de-risking factor. It provides this incredible demand visibility. It's like a geopolitical insurance policy against price swings.
And it signals that the government views the company as a strategic national asset.
Precisely. And there's more. They also got a $150 million loan for another facility in California, which is set to open in 2026.
That one's for heavy rare earths, which is a whole other level of difficulty.
It is. NdPr are considered light rare earths. Heavy rare earths are for even more specialized high-temperature applications, so securing that domestic capacity, it basically completes their strategic moat against China.
It's incredible insulation.
Yeah.
And I think that Apple recycling partnership is really interesting, too. It lets them grow capacity without just relying on mining.
Yeah, huge for sustainability, and it could seriously lower their input costs down the road.
Okay, so let's look past the current revenue numbers, because the forecasts are what everyone's really focused on.
And they are just wild. Analyst consensus sees revenue going from around $204 million this year, 2024.
All the way to $1.42 billion by 2029.
$1.4 billion. That's not just growth. That's building a whole new high-margin business from the ground up.
And profitability is expected to swing just as dramatically, right? From a loss this year to a pretty significant profit by 2029.
Yeah, a forecasted adjusted profit of around $2.37 per share. That just shows you the margin expansion they're expecting once those high-value magnets start selling.
But building all this out, Fort Worth, California, that takes a ton of cash. Can the balance sheet handle that kind of burn?
It looks like it. They've got about $468 million in cash versus about $315 million in total debt. So they're in a positive net cash position.
Which is strong.
Very. And that cash, plus the money from the DoD and Apple, should be enough to cover the negative free cash flow while they're in this heavy investment phase. The big unknown is just execution.
Right, actually getting it all built and running on schedule.
Exactly.
So how is the market digesting all of this? I mean, the stock has had a spectacular run, up 380% year to date.
Yeah, the market is clearly looking right past the current earnings and trading on that future vision.
The technicals seem to support that optimism too. It's trading well above both the 50-day and 200-day moving averages, a classic bullish trend.
It is, and if you look at a momentum indicator like the RSI, the Relative Strength Index, it's sitting at a neutral 42.3.
Which means it's not overbought. It has room to move higher without being, overheated.
Correct. There's technical room for more upside. Support looks solid around that $50 level, and resistance is probably up near $80 or $85.
And what about the analysts?
Overwhelmingly positive. I think 7 out of 11 rate it a strong buy. The average price target is near $70, with some going as high as $95.
That confidence has to be coming from that long-term demand visibility we talked about, the government and OEM contracts.
No question. They can see where the sales are coming from for the next decade. Now, one small note of caution for the short term, the MACD indicator is currently negative.
Okay, so maybe some near-term choppiness or consolidation is possible, even inside the bigger uptrend.
That's how I'd read it, just something to be aware of.
So as we head into the end of 2025, what are the key catalysts we should be watching for over the next few months?
The number one thing is the Fort Worth facility. Commercial production is supposed to start late this year, so any day now.
And getting those first magnets delivered to Apple and GM will be the ultimate proof point.
It's everything. Then you'll have the Q4 earnings report in early 2026. And again, the focus won't be on the revenue number. It'll be all about the operational update. How is production scaling up?
Any technical hurdles? That kind of thing.
Exactly. And you've also got some index rebalancing in December, which can sometimes drive volume.
Of course, there's always the rumor mill, too.
Yeah.
We've heard chatter about another big EV maker or maybe accelerated DoD orders.
Right. And you have to remember those are unconfirmed, but they do add to the stock's high beta nature. It has a volatility of 1.7, so you have to be ready for big swings.
But the primary risk here isn't a rumor, it's pure execution.
It is. This is an incredibly complex industrial project. Any major delays at Fort Worth or later at the California facility could really hurt the financials and the stock.
So, to sum it all up, MP Materials isn't trading on what it's earning today.
Not at all.
It's trading on its future value as this unique, non-Chinese, vertically integrated strategic asset with the full backing of the U.S. government and some of the biggest tech and auto companies in the world.
That's it perfectly. It's moving from being a simple commodity company to being a technology and national security company. It's a completely different business model with a potentially explosive future.
It really is.
And it leaves you with a really interesting question. We know the heavy rare earth facility is coming online in 2026, making them fully integrated. So think about this. What major new industry beyond EVs is going to be most desperate to secure a non-Chinese supply of these heavy rare earths? And what kind of growth does that represent that maybe the market hasn't even started to price in yet?